Think about what could have been if you didn't blow that profit from account and now you have to buy another one. It happened to you countless of different times, yet you're still not learning from your mistakes. And the reason for that is because you're not understanding what you're doing wrong to begin with. You're thinking that it's your risk management, you're thinking it's your psychology, which yes it is, but it is also your strategy. People like to always say, I'm already profitable but my psychology, I'm already profitable but my psychology, I'm already profitable but my psychology. Shut the fuck up, man. How about this? Shut the fuck up. It is not your psychology alone. It is your psychology, but let me get into this. Your psychology is strictly tied to how simple your system is. If your strategy is extremely complicated, then you're not going to be basically able to execute your trades on a day-to-day basis. So although it is a psychological issue, because if we assume you're the smartest man on earth and you're basically a robot, okay, you're an AI, then yes, you are going to be able to execute even a complicated strategy. But you're not, you're human. So you're not going to be able to execute a complicated strategy. So in order to get your psychology in check, you firstly have to understand that you need a simple system. So this is why we're going to be trading my simple system today. And we're not going to be creating a rocket. This is not going to be some rocket science type of BS. It is going to be the simplest strategy that you have ever seen. So first things first, we want to analyze the higher time frame. For that, I like to go into the 4-hour time frame. Oh, we are already on the 4-hour time frame. Let me check. Is the NQ? Yes. So do we want to trade higher or do we want to trade lower? For that, let's actually go on to the daily firstly to have a broad overview. So as usual, we need to go for the previous day low or for the previous day high. So the question is, where are we more likely to go? I would even say that we're going to be having a little bit of a reversal today, and we are not going to go for the low, but instead we're going to go for the high. I'm going to count on that basically. Now let's go on to the 4-hour time frame. Okay. The 4-hour time frame is basically going to be that we have FEGs left in here. We're also going to be having imbalances, which that's going to be a upgraded BPR, as I like to call it, because you're having an FEG falling into a gap. So I do believe that the movement is higher. Also, if we're going to combine all of that, this is going to be a relatively high, and all of that is also then further suggesting that we need to trade on to the upside, because there's 1, 2, 3, and also on the higher time frame. So let me just put it like this: 4 different reasons on why we need to trade on to the upside and not to the downside. Okay, so the higher time frame is already done. Let's check out our 50-minute range. Now for our 50-minute range, we are pretty much just going to be having that low that has been created right now. There's going to be a good chance that we're going to be continuing our movement lower for that low and only then reversing once we have also traded into that no wick candle. This could be a potential point for us to reverse onto the upside, but I wouldn't specifically count on that too much. We could also just take a small scalp onto the upside and just be done with it. But depending on what the price action is going to give us, if we are starting to see reaction based off this FEG that is going to be created in, as you can see, 4 minutes, then probably I am just going to take a quick short onto the downside. Even though the higher time frame bias is going to be bullish, I'm just going to be taking a small scalp lower, all the way probably into this low. You don't want to get crazy today if you're taking a short, because otherwise you're going to get stopped out, as the high time frame bias, I've already shown it to you, is on to the upside. But yeah, this is basically the plan. 50-minute range has also been identified, and of course the range high is going to be in here. So range high, this should be the more obvious. The range low, I get it. In these cases, it is going to be a little bit harder for you, especially for the guys that are just joining in new. So our pre-market is pretty much going to be, let's go into the 4-hour time frame. No, actually daily. That the higher time frame is going to be bullish. Let's mark out all of that. Okay. So this is on the daily time frame. Higher time frame is bullish. Okay. And I'm also say, let's put it as a bullet note. So bullet, higher time frame is bullish. And then I'm also going to be including that we're going to go for the previous day high, not for a low. Previous day high, not previous day low. That's pretty much it already for the daily time frame. Let's go into the 4-hour time frame. We're just going to be marking it out as a bunch of liquidity points, this and that. Nothing too crazy, to be honest. So in here, this is going to be the 4-hour time frame, and we're going to be saying, well, a lot of FEGs basically, lots of FEGs, and also upgraded BPR. Okay. And now also we are going to be having a small chance to take a short lower. Let's take a screenshot of all of this. This is going to be the 50 minute, and let's include it basically. Okay, from this point on, let's see if we're going to get reaction. Let's pull out our trading plan. Let's maximize it. So the question in the room, as usual, is going to be, are we going to be trading, or trading low or higher, of course, but we pretty much already had our liquidity rate, because 830 is going to be in here. As you can see, high has been created, high has been taken out, multiple highs actually, all of these. But of course, that has to be past 830 as usual. Let me do this a little bit bigger. Past 830, and only from that point on it is going to count. But that has already happened. So we have taken out liquidity. Okay. Now we're looking out for our movement candle. Previously, as I've said, we're not automatically going to be taking a trade if we see a movement candle. I want to see a reaction of this 15-minute FEG. Let me mark it out. FEG, 15 minutes. See, it's that simple. From this point on, we'll be waiting this out and see if we're going to get what we want to see. And from here, it's really just waiting. I mean, the previous session that I have done on this channel, of course, was crazy. This was probably the craziest session that I've ever done on YouTube, at least on a live recording, because everything was just going so smooth. And even though I was not initially correct on when certain things are going to be happening, I did manage out of the trade really well. And yeah, I really recommend watching the previous session that I have done. So this was day 10, this is going to be day 11 of trading with $100 to prove it's not luck. And yeah, from this point on, it's really just waiting. I'll come back once the price action is going to get more interesting. Okay, there we go. We are back in the making, man. Nah, like sometimes, as I've said many times in these live trading sessions, you're going to be spending the most amount of time watching price action and waiting. You're not going to be trading most of the times. You're going to be waiting. Okay, I've waited a little bit of time. Let's go into the 15-minute time frame and see if we're starting some reaction. Probably not so far. The candle has about 8 minutes left until it's going to close, and depending on how it's going to close, I am going to be telling you, okay, this is a reaction, this is no reaction, so it's basically ignoring. When the candle is looking something like that, that means that it ignored the entire FEG. But yeah, that's basically the update as of right now. I like all of this on the 1 minute time frame because it suggests that there's going to be a liquidity left to trade lower, and also this entire FEG, of course. So I do believe there's going to be a reason to trade lower. But let's see how this 15-minute closes. Okay, this looks like we have our movement candle. I do consider that as a movement candle. We are on shorts right now. You know, and it's kind of funny because I do really wonder if anybody has ever asked themselves, why is this guy saying we are in shorts right now every single time when we're taking a trade? Well, that's because I'm doing these shorts, right? And people just expect me to say that, so they stay longer. I mean, don't ask me. Don't ask me on this one. Right now, we are going to be having this FEG, which hopefully we are going to be respecting it and then trade on to the downside to the range low. Okay, we're starting to see some movement. You know what I thought? If this is going to hit a take profit and we are going to be having a profitable day today, then I'll probably be start using 3 micros instead of 2. This is going to be a really good one. We're going to be making way more. Of course, also losing way more, but it's going to be worth it overall. Okay, stop loss is going to be at break even at this point. If the price returns higher, there's not going to be any significant reason on why we should hold a trade. All I'm really doing is just eating a little bit, man. You know, I'm thinking also about closing early. No, it has to be at least at a 142. I'm not going to be closing out this early. This is going to be the classic scenario where a lot of you guys are just going to get stopped out, or you're just going to exit early. You're just going to get out because we have traded higher. Remember, we are in this entire FEG. It is basically the same that has happened in here. We were in this FEG, we rejected off from it, lower. We are in this FEG, we expected at least, trade into it, lower. You know what I thought the other day? Trading is most likely the only profession that is not going to get taken over AI. And if you're asking me, you know, what is going to be the future in terms of how to make money? For me, it's simple. You know, for everybody that is watching the video, it's simple. It's trading. But in terms of everything else, I don't believe that digital products as a whole are going to be as valuable as in the future. I mean, AI is just going to do everything for us. This is just what I believe, okay? Now, the same can't be said about trading. If you're going to be saying, well, you know, what gives you the proof that AI won't replace traders? Nothing gives me the proof, but the fact is that institutions, hedge funds, whatsoever, which hedge funds are actually just scam, okay? Let's put it this way, but that's a different topic for a different day. They have been using AI for forever at this point, and yet you're still able to find an edge in the market. So it's nothing new that they use AI. AI is also something that isn't new. It is just that over the past, you know, let's just say 6 years or so, that you can use that shit and ask it questions. But AI has been a thing for the last 20 years or so. Only now it's been available to the Joe Schmo. Okay, so let me check this out on the 50-minute real quick. We still have potential to trade lower. We rejected off this entire 50-minute FEG. Let me give this 15-minute candle a chance. If it's going to start looking bullish, I'm out of the trade. Sometimes I'm thinking to myself how dumb as an individual you have to be in order to hate another person through the internet. But sometimes people are just hating through YouTube comments, Instagram, and I'm just thinking, you know, I feel sad for you. I genuinely feel sad for you. Because if I put it onto myself, if I put myself in another man's shoes, I'm thinking, man, like I don't have time for this. Like, it is just too boring for me. Even if I hate somebody on whatever platform it's going to be, I just don't have the time, or not even time, man. It's too much effort for me. It's just too much effort for such a low reward. Which, like, what the fuck? What the fuck, does it even have a reward? I don't think so. But yeah, you gotta be a really weak individual to do that. So we are running currently at a 1 for 2.5. Let's see if we can run it a little bit lower. I mean, it has to run lower, doesn't it? Let me see. How's the 50-minute looking like? We still have like 10 minutes left. Okay, that's actually a lot that we have to wait. So only until here at this point, then it's basically going to show whether we're going to get out or we're going to stay in. So there's basically 3 scenarios. The first one is going to be if we just shoot on to the upside. So we just do something crazy like this one, okay? Just something unimaginable. Which obviously isn't unimaginable, but everything can happen basically. If we're going to do something like this, we're out of the trade, okay? It's not even worth it waiting for the break even. No, you know, I'd rather get out with a little bit of profit than landing at a break even. If I already see signals that the market is telling me I want to go into the upside, you're wrong. Or at least you're wrong that we're going to go for the range low. I mean, so far, as you can see, we have been right a good amount of price action, if you want to like that. But then the price action is going to tell me, okay, you're wrong that we're going to go for the range low. That's going to be scenario number 1. We're just going to get out. Scenario number 2 is going to be that I want to, basically, we're going to be waiting all the way until we have closed the 15-minute candle. This is why the vertical line is in here. And then depending on if it's going to close bullish, bearish, we're just going to stay in. If it's going to be like a 50-50 candle, so some BS like this, where it's going to be in here, then that is already an indication that either there's going to be a long consolidation, which I don't like to be in to begin with, so I'm probably going to get out, or, well, if it's going to close bearish, then I'm just going to stay in for now. These are pretty much the options. Okay, so basically exactly what I've said previously is happening right now. We're having a movement candle. I'm going to look at the reaction, not going to get out immediately. Let's see how this develops. The next candle will go for the candle high. That is to be expected, probably also for this high. And from this point on, I would ideally not like to see a lot of reaction. We're going to give it a little bit. Ah, man, like this of course hurts. Like you could have gotten a, yeah, almost like 1, 2, 3, but like never count all the way to the bottom. Rather something here would be realistic, because you can't get out at the bottom and at the top every single time. Okay, like this is unrealistic. Ooh, it's not looking good, man. Let's see how this candle closes. Hopefully it can stay. Okay, it does not close above this high, so that's a good sign. We just gotta be patient, guys. We gotta be patient. There's a good chance we're going to be revisiting this high. Not something that I like to see, to be honest. Okay, we're just going to get out. It's a little bit unfortunate. This was, yeah, not even a 1 for 1. Oh my god. And in this exact moment we pumped up, man. So it was absolutely the right choice getting out of here. Maybe we are going to continue lower now. But it's hard to say, man. Like, I'm happy with what we have gotten in here. I forgot to check the moving candle. And that's basically it. You know, let's not worry about it too much, because the longer you're looking at this, the more likely you're going to be revenge trading. And when you're revenge trading, that's where you're going to fuck this up. So just keep in mind, okay, we have taken our trade. Never mind, that's already it. Because I'm telling you, the more you're going to look at the price action, the more you're going to be, ah, man, I should have holded this. Maybe now it's going to reverse. No, fuck all of that, man. You're out of the trade. So let's journal our trade as usual. Let me go into the aftermarket notes as well in just a second. So here's going to be that. It's going to be our entry. It's going to be our stop loss. It's going to be our take profit. We have used 0.2. I mean, we were profitable, but ideally I would have liked to see ran past take profit. Oh, like a lot. Let me put it this way. This could have been 155 basically. I'm gonna do it in price. So that's going to be the price. Yeah, man, this could have been way more. Okay, we gotta select NQ for that. Okay, this is about right. Wait, is it? Yes, this is right. So from this point on, we have taken it at, you see, you would have been stopped out guaranteed at this point. So this was 858. So 858. And we have gotten out of the trade in this candle. So this was 925. So 925. There we go. Confidence, I'm gonna say a 4, because it could have been better if we rather just waited for the entire price action. Now it took a long, but I'm happy with how it gone. So I would say I was quite bored, to be honest. So we're just going to select that. What went wrong? Early entry. We could have waited this out a little bit more, but it's going to be fine. We've taken a short close. This was New York. Yes, yes. Okay, we're going to be locking in the trade. There we go. And yeah, this was an easy live trading session. And this is going to be the profit so far. As you can see, our win rate sits at 78%. That's cool. Let's look at our trades real quick. There are going to be all of our different sessions that we have done. You know, I want this to be a big ass library, like a lot of different trades. You know, at the beginning we have taken like a long. Now we are starting to catch up on the shorts as well. Like to see that. And yeah, that's pretty much it, guys. If you like what you're seeing, this is my personal journal. You can check it out if you want. And with that being said, guys, make sure always trade based off data and not guesses.